India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, kicking off a new week. Last week was very bad, very poor and tough if you were bullish. I mean, even if you were bearish, I think, the force of the downside surprised everyone, one and all. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks. And I guess that's the critical question, right, Prashant, that after that 5% massive cut, I think it was the biggest slide in some 2 years, the weekly slide, whether now we are due for a bounce back, but just the ferocity of the selling, from the FI fraternity, that's something, I guess, maybe that was the element of, complacency was a word a lot of our guests were using last week as well, and maybe that was it, that we didn't realize that when FI selling happens in this measure, it's going to hurt.
Well, that's right? The market surprised us on the upside, the way we moved up, and then, in fact, the reverse happened of late. I guess from a longer-term perspective, you need to participate, and these opportunities will prove to be buying opportunities. So let's hope for a better week in comparison to what we saw last week.
Absolutely. As they say, you can't get the good without going through the bad.
Yeah.
Once in a while. And it's actually literally been once in a while. Actually, more than anything else, take a look at what the market has done from the highs, right? It's down 5%. The problem is, it's not 5%. The problem that no one is used to a 5% pullback, not even a 5% pullback from the highs. And that's essentially been a feature of this bull market, very different from all the prior ones that we've had. But I'll get to some of the broader points in a bit. Let's get specific. So the Nifty on Friday fell another 200 plus points. So it was a fifth straight loss, fifth straight day of losses for the index, benchmark index. It didn't look good. And Friday especially was a very volatile day because at one point the market was up 150 and within 5 or 6 minutes it was down in the dumps, and again down about 50 points, and then selling accelerated into close by 3:30. But things changed. Things turned a little bit in the US market session. Now, US equities rallied on what was essentially a blowout September jobs print. Never a dull day, right, with regards to this monthly jobs data. If you remember exactly a month ago, this is essentially the number which triggered all the volatility for global markets for a few days because the number was so weak and the market panicked that maybe the Fed is behind the curve. Well, guess what? Fed does 50 basis points in terms of rate cut. The next number is a blowout number, is super strong. So what does the market do? It adjusts Fed pricing accordingly. But, the S&P was up about 0.9. The NASDAQ was up about 1.25. The next FOMC meeting is on the 7th of November, and the market is essentially crushed what Fed will do in terms of rate cuts to 25 basis points now. Actually, the cumulative cuts for this year, for the full year from here on, have been pushed down to 50 basis points. The only question is if we get another surprise on the downside this time in terms of jobs data, will this need to be moved around again or will this stay at 50? Remember, after the last 50 basis points cut, the median expectation out there was at least 100, if not 125 basis points worth of cuts through the course of the year. That's now 50, so it's pretty dramatic. Now, a big move in US yields as well, naturally. So data is strong, economy is of course seemingly strong. Yields went up 13 basis points. We are back at almost 4%. Dollar index, well, it's been a global outperformer for the last 5-6 days now. So 102.52 on the dollar index coming through. Oil prices, they're above, around 78 rather. And of course, markets are still awaiting a direct kind of confrontation, escalation between Israel and Iran. We haven't got that yet. There is, of course, a fair bit of fighting which is going on in Lebanon, but nothing directly after those strikes by Iran. Now, China is the other big factor, right? And that essentially is the market which really pulled all of last week. The mainland markets were shut all of last week. They are back into the picture tomorrow. They reopen tomorrow, and we'll talk more about this. Now, the setup for the Nifty, at least in the near term, is looking good for a bounce. Just to sort of circle back and tie in the levels. For the Nifty, you basically, when you're looking for a bounce, you need to get past some of these big support and resistance areas. The resistance essentially is the 40 hourly exponential moving average first. which is 25,572. There you go. That's the number. The support is a zone, 24,800 to about 25,000. So that's essentially a 200-point range where the market should actually find some support. We are practically there in that particular zone. For the Nifty Bank, it closed slightly below the rising trend line level, which we highlighted last week as well. Support levels for the Bank Nifty comes in at 50,700 and then 50,242. So these are, the 5242 level is the lower Bollinger Band. On the way up, the gap area, when the market fell like that, I think it was on Thursday, that essentially becomes important. The gap area is between 52,582 and 52,817, and you got to get past that for further buoyancy and for the market to feel a little more confident. GIFT Nifty will come up on your screen, gives you an indication of how the start is likely to be. So about a 71 point upstart, higher start is what is indicative right now. Surbhi.
Yeah, absolutely. And, markets across Asia are actually building on some of those gains. Yeah. And the moves for the Japanese market are worth noting because of the kind of strong non-farm payrolls data and a couple of other data points in the US, the yen, which was surging, has suddenly reversed course, and it's dollar on top once again in that market. In fact, the dollar-yen move has taken that number back to 149. So pretty dramatic moves once again in the currency markets playing out. All of this is doing, the non-farm payrolls data and the fact that there is continued buoyancy around China. Look at the Hang Seng this morning. Again, it's building on gains after a big last week. We've got another 1% sort of a move coming in. That takes the total tally for the Hong Kong market. The rally in the last 1 month is 31%. And we're still seeing some green on top of that. So that continues to be one of the big watch points. By the way, there are lots of central bank meetings across Asia this week. There is the Bank of Korea. There is the Reserve Bank of New Zealand. Both these banks are expected to cut rates. And then there is our very own Reserve Bank of India. We are not going in with a rate cut expectation, but a lot of economists are watching out for a potential change in stance. So more on that coming up as we go along through the day and the week as well. Let's talk about some of the key numbers. And the fund flow picture obviously is the one that we've been watching like hawks over here. And look at the selling once again that came in on Friday. Big selling numbers again, almost towards that 10,000 crore mark. Now, if I talk about the cumulative selling, over the last 4 trading sessions, then the numbers are really piling up. I mean, it was around 9,800, dipped a little bit. Then we had that gigantic 15,000 sell number. And if you thought Friday would be any relief, well, it wasn't. So we need to see when these red bars start sort of cooling down and when the pace of this selling and the magnitude of this selling starts pulling back a little bit. Now, on crude, by the way, there's a bit of an ease off this morning. Prices are taking a bit of a breather. And that's in part because of this one statement. Remember, on Friday, we were discussing another statement from the US president. Well, he talked down the market on Friday by saying that if I were in their shoes, that's Israel's shoes, I'd be thinking about other alternatives than striking oil fields. So that helped cool down some of the alarm in the market. But then the strikes are continuing. We know that Israel has conducted fresh strikes as early as this morning in southern Beirut. So one needs to wait and watch and see what happens over here. So that's a watch point. Lots of business updates, by the way, and we'll be talking a lot more about them as we go along. On the BFSI side, just 1 or 2 names to highlight. It's all about that fight for deposits, and some sort of players are coming out right on top. So, for instance, if you look at the updates, in IndusInd Bank and RBL Bank, these are 2 that really caught my attention because of deposit mobilization. The momentum there has been really good. Deposits up 15% for IndusInd. For RBL Bank, deposit growth year on year is 20%. So banks are trying to pull out all stops. Federal hasn't been that successful. So let's see. And good growth numbers from, let's say, an L&T Finance as well. By the way, Titan, speaking of business updates, beyond BFSI, Titan should be, making the street happy because the number on the jewelry business is looking very, very good. So we'll talk about a lot of this. But before we get to the individual stock action, Nigel, I guess the bulls will hope that finally they have a breather and they can come back and sort of reappear on the street today.
I think a bounce is very much due. Though the bulls, they have their hands full and they have a couple of headwinds that they're facing. One is that crude oil prices, as you briefly mentioned, they're up by nearly around 6 to around 7%. That's a macro tailwind that it's turned into a headwind now. And also you have the dollar index that's up a couple of percentage points in the past week. The FI outflows, yes, that's a worry. And also I was looking at a Motilal Oswal note today in terms of earnings growth. Well, it's going to be quite a muted one for Q2. So no big positive surprises is what the street is waiting for. But I think we're bracing for a near-term bounce on the Nifty itself. And a couple of technical factors are suggesting that. The clients, they were net short, now they're net long for the first time all the way since August 23rd. So that's one point. The second factor is the PCR. That's moved down to around 0.68. We have seen it move to even 0.63 odd before we get a bounce. But that's normally a level where, in fact, we do see a bit of a bounce. And the FI long positioning, it was getting extensive on the long side. It's getting a little bit too good for comfort. And from around 3.5 lakh contracts, that's come down now to around 83,000 contracts. All of this in a matter of a week itself. So it's down by nearly around 75%. And the clients, they have been timing this market correct, right? They were net short. Now they have moved to net long positions, close to 30,000 contracts on the long side. And they are the ones that normally get it correct. So that's about client as well as the FI positioning. Now in the Nifty options data, two strikes were fairly active, the 25,200 call and the 24,800 put. Both these two very, very active, and this is giving you a broad sense where the Nifty gets its support at. So since the 24,800 put was fairly active and you have premium at around 100 rupees, the 24,700 mark is a very, very important mark. If that breaks, then you're bracing for a sharper correction. So these are the levels. We're currently around this 50 DMA. Support comes in, crucial support at around the 24,700. And the 20 DMA comes in at around 25,500. You get more confident only once we close that. Similarly for the Nifty Bank, we ended at around that 50 DMA. The 20 DMA is the mark on the upside. On the downside, the 100 DMA or thereabouts. The sense you're getting is, today you need to participate on the upside if you get that intraday dip. And then, you'll have to play it for a couple of 100 points odd. Very, very nimble-footed, but I think the bias is on the long side just for today's session. The stock I'm looking at is Infosys. Everyone's been talking about the large-cap names cracking. Well, that one's very, very close to a fresh 52-week high. And the IT index, even in Friday's trading session, was up 0.3%. So the tech space seems to be holding one end up. You'll need some support from the Nifty Bank, and hopefully the Nifty can see a bit of a relief rally.
Oh, absolutely. And I think nimble is the word that you want to keep in mind as you get set for trade today, because that's the kind of market we're in. Let's get started then. Our equity call of the morning coming in from Victor Shevitz of Macquarie. Now, he's saying that investors are giving the benefit of doubt that China will do what it takes, but it will not be easy, with the problem being demand for and not supply of money. And more radical policies are likely to run against political and social covenants. Yet he adds it feels too early to fade this rally, and as Japan of 1990s showed, these can be powerful. He says as China rallies, pressures on India will rise, especially given its slowing economy and high valuations, and liquidity will be sucked out from other EMs. Long term, Victor says they are still more comfortable with India's secular outlook than with China's battle against high saving rates. By the way, speaking of China, let's remember that today we're expecting a press conference where more of the fiscal stimulus measures, they are likely to be detailed. And Prashant, that's what we've been discussing, right? It's about whether you can really fiscally stimulate demand rather than just cutting rates, perhaps.
Absolutely. Today or tomorrow? Or
I'm going to check up on that. I thought it's one of these days.
Because the market's back to the economy. So they come back tomorrow.
Ahead of the market, prep everybody in, and then try and meet expectations. Gave it a 32% rally.
All right, well, that's, I think, going to be closely watched. Richard Harris is Executive Director at Port Shelter Investment Management. He's with us now to take some questions. Richard, good to have you with us here. Thank you for your time. For a lot of our viewers here in India, Richard, the question becomes: will there be more selling here, foreign selling here? I was looking at the latest data, and that indicated that, and it's been why it's not as if it's not known. EM funds are underweight. Global funds are underweight India. I mean, relative to India's weight in the MSCI benchmark. But there have been outflows, significant outflows in a very short time span. What's your sense, Richard?
Well, I don't think it's necessarily anything to do with India. We, of course, have had some significant moves in China, and I think there's probably been a reaction there. I mean, the foreign investors in Europe and the US are very US or European centric and tend to think very much of their own area. So they still have a feeling that EM is one general block. So I think what they've basically done is maybe look to lighten India a little bit, look to put some more money in China. I don't see this being lasting. I think the move in China may be lasting, but I don't think people are going to necessarily do that kind of swap in the longer term. I think people will look at India for its own merits and focus on that.
Richard, hi, good morning. And yes, Prashant, you were right, actually. Just for the benefit of our viewers, this briefing around fiscal measures from the government in China that's happening tomorrow. Today, it's all closed for the Dragon Week festival that's been underway, the Golden Week festival that's been underway. Richard, the question really is that even though you're saying you're not expecting this swapping India for China kind of a trade to last too long, the question is, what about incremental money? We've been kind of waiting to see FII interest return to the market, but we haven't seen the sign of that. And now you have China. So what should we expect from the FII fraternity? Everybody says the long-term narrative is good. The money hasn't been coming in.
Well, the long-term narrative is good, but don't forget that emerging markets tend to be right on the very edge of what investors are thinking of in the West. And it only takes a small amount of money to come from these very large pools of capital in Europe and the US to make a difference in emerging markets. So when you're sitting here, from our point of view, it does seem to be rather lumpy. It does seem to be rather broken in terms of its flow. But I think generally fundamentals will out. The Indian economy has been strong. You're still seeing, should we say, emerging market growth levels, economic growth levels in India, whereas China, of course, has been disappointing over the last couple of years. So I think investors are likely to see through that and to keep investing in these markets. But in the shorter term, we shouldn't be too concerned because remember, we are really at the end of the asset allocation making decision. And that's why you tend to see big inflows and big outflows of these markets, which are, if you like, emotional as much as anything else. But the big thing to remember is that if there is a turn, then there will be quite a lot of money coming in on the margin into emerging markets coming out of Europe, which make relatively little difference to European allocations.
Hi, Richard. Good morning. Good to see you, Win. What are you making of the data points we're getting from the United States? That economy seems to be in good shape, so to call it. You know, the data points are suggesting that. And what about your expectations from the Fed? 50 basis points should be a done deal?
Who would have thought it? It looks as if the Fed may have got it wrong this time. You know, why did we have a 50 basis point cut? Maybe a 25 basis points to save face. So clearly they weren't looking at these figures. I mean, I think maybe what a lot of people have missed, and it's a very, very easy miss, is that this summer was quite quiet. It was certainly quiet in Europe where I was. It was quiet in a number of areas, quiet in terms of the fact that people weren't really working. It was a little bit of COVID revenge. You know, people didn't want to take last summer off. They did take this summer off, both in the US and in Europe. And I think that those figures really came through. So we saw slightly weak numbers in July, slightly weak numbers in August. Now, all of a sudden, in September, they've picked up again. And I think what you have to say is we're looking at unemployment in the US, for instance, really being quite low. Not the lowest it has been, but, you know, it's really quite low at 4.1%. We've seen job creation increase. We've seen the consumer still growing. There's still money around. And this is still very positive when you look at a backdrop of enormous interest rate rises in the US. And we're in a position now, I think, where certainly all those people who are saying, oh, interest rates are going to be cut 3 times, 4 times, 5 times by the end of the year in the US will be confounded. That's just not going to happen. We don't really have enough data. We can't see that happening before the US election. So I think, you know, we're in a situation that the economy still seems quite strong. People have gone from saying, look, are we going to have a hard landing to, oh, we're not going to have any landing whatsoever in the space of about a week. So I think the picture looks quite good still economically in Europe through to the end of the year. Clearly, there are issues and risks out there. But the economic picture is still ticking along quite positively.
Well, maybe as you know, we spoke with Christopher Wood sometime back of Jefferies, and he said, and this is right after the cut, 50 basis, actually the day after the 50 basis point cut, he said, of course, it was just his thought. He said, well, the cut is political. I mean, it's intended to help, you know, sort of one candidate over the other, the incumbent. But we'll see. And it'll be interesting to get his thoughts again on the matter. Richard, good to speak with you. Thank you very much for your time.
Thank you, Prakash.
Here on CNBC-TV18. We'll take a quick commercial break here. We're going to come back, but let's quickly run you through some of the interactions, corporate interactions which are lined up here. So at 8:35, we'll get our exclusive conversation with BK Goenka of Wellspun World. That's coming up on the company's growth trajectory and a lot more. At 9 o'clock, Nitin Agarwal of Motilal Oswal Financial Services comes on to discuss some of the banking sector updates, pre-quarterly updates we've got. At 9:20, Gautam Shah of Goldilocks Premium Research will be a market master of the day. We talk about, of course, the sell-off and where we go from here. At 9:40, we connect with Suvankir Sen of Senco and Saurabh Gadgil of PN Gadgil. So it's a jewelry sector discussion. And a little later after that at 9:50, we have another interesting chat with Krishnamurthy, former CEO of India Electronics and Semiconductor Association, and Raghu Panikar of Kane Semicon. So that's the focus on what's happening in that ecosystem. And towards the end of the show, and it's the economy, my colleague Lata gets chatting with Nikhil Gupta of Motilal Oswal Financial Services and Mahesh Vyas of CMI as they talk about the capex cycle here in the country. Stay tuned.
All right, well, we'll slip into a short break. You come back, we'll tell you all the stocks that you should be tracking for today's session. Don't go anywhere.
Welcome back. Well, the setup, at least from the Asian market perspective, is looking positive, and we are hoping that the bulls will get a chance to bounce back today. That's what the implied open is suggesting. So now let's talk about individual stocks, and plenty of news flow over the weekend. Our team is standing by with the CNBC-TV18 list of top stocks to watch this Monday morning. Hi, guys. Good to have all of you all here. Let's start with some bright and sparkling news that came in from Titan in the form of that Q2 update. Mangalam, tell us more.
Well, it's a good update that has come in. You know, if you just look at the absolute performance as well, jewelry revenue growth of 26% after a soft first quarter performance is pretty good. The company said that the like-to-like sales in their domestic operation also came in mid-teens. The only thing we need to watch out for is how much of that is one-off and how much of that is preponement because of the customs duty cut. Because that's what the company and all other jewelry players are saying as well. The reduction in customs duty aided their demand this time around. So let's see whether, you know, festive season demand also stays as much, or was there some preponement? Did people borrow, from the next couple of quarters for the second quarter itself? They added 24 new Tanishq stores during the quarter. The other thing we'll have to watch out for is the non-solitaire studded segment, which recorded, growth in high double digit, but solitaire segment saw a decline amidst price uncertainty. So overall studded sales this time around were lower. So to that extent, whether the company will hold their margins at that 11% mark that they'd guided for or not. For starters, see the stock open in the green. Thereafter, we'll see where it goes.
Okay, all right, Mangalam, thanks a lot for that. Well, I'm looking at Tata Steel. They've come out to their operational numbers, provisional numbers for the past quarter. The India business, good growth, around 5.8% in terms of, deliveries is what they have given. The Netherlands business, well, remember they had a realignment of one of their blast furnaces. So on a quarter-to-quarter basis, it's a flattish number, but on a year-on-year basis, it looks quite good. The UK business, they're transitioning into green steel. So because of that, you have that decline out there because some of those furnaces have been shut. And Thailand is more or less flattish. So just to recap all the, top highlights of the past quarter, for Netherlands, realignment is done, so you have good growth. Europe is going through the transition phase. So for the next few quarters, it will be a more or less flattish or a degrowth is what we are likely to see out there. And India, well, we have commissioned that big facility at Kalinganagar, state-of-the-art out there. So that's what's going to help volume growth for the second half of the year. Expect the stock to open up in the green on the back of this update.
All right. Nigel, thanks for that. Tata Motors and JLR have got updates. Vinny's here to update us. Vinny, good morning.
Good morning. So yes, we're keeping an eye on Tata Motors because we have seen those JLR UK sales number that have come in. Good numbers when you're looking at it for the month of, between July to September. 33% uptick there, 10,807 units is what they've managed to sell during this period. So yes, a good uptick versus last year, the same period. Specifically, when you're looking at it in terms of brands, Jaguar, they managed to sell around 1,814 units. That's a bit of a subduedness versus last year. But Land Rover and all those brands in terms of the Land Rover brand, that has managed to see an increase of 47% versus last year, coming in at around 8,933 units. Overall, for JLR UK sales, we're seeing it's a multi-month high level in terms of the number of sales of units. And that is why we're expecting a bit of a green coming in even for Tata Motors today.
Okay, all right. We'll watch out for Tata Motors. Vinny, thank you for that. Let's go to Abhishek. Lots of updates have come in over the weekend. I think he's picking up IndusInd Bank, Federal Bank, and L&T Finance to begin with. Abhishek, good morning.
Good morning. So the fight is on deposits, and that's coming in at a huge cost for many of the lenders. Let's begin with IndusInd Bank. CASA ratio is at 33 quarter low, and in terms of loan growth on a YY basis, is the lowest that you are seeing in last 10 quarters. Now deposits are up 14.7% YY and about 3.5% sequentially. CASA ratio is at 33 quarter low, coming in at 35.9% versus 36.7%. So most of the deposit growth has come in from the term deposits. Advances growth is at 13.2% YOY and about 2.6% sequentially. Credit deposit ratio has declined for them both YOY and quarter-on-quarter. In terms of Federal Bank, the deposit growth now that's declined sharply, and it might be at a multi-quarter low. So let's take a look. Deposit growth is at 15.6% YOY, which is the lowest growth that you are seeing in last 7 quarters, and sequentially the deposit growth is just 1.1%, which is the weakest in last 9 quarters. So CASA ratio, that declining trend they have arrested. CASA ratio is at 30.07% versus 29.3%. Now certificates of deposit, now which is a high cost deposit, that's increased by 11.5% on a sequential basis. So net interest margin can come under pressure. Advances growth is at 19.3% YOY and about 4.3% sequentially. CD ratio has improved for them both YOY and quarter-on-quarter. L&T Finance, the disbursements are on the weaker side given the fact that rural economy is not performing well. So in terms of retail disbursements, they are up 11.5% YOY and about 1.5% sequentially. In this, the rural business finance disbursements are down both YOY and quarter-on-quarter. Farmer finance disbursements, they are down 6.5% on a sequential basis. So retail loans overall remain strong, growing at 28% YOY and about 5.3% sequentially. Back to you.
All right, thanks for that, Abhishek. Well, let's hop across to Sonal. She's here to tell us about the real estate updates that we've got in Godrej Properties and Macrotech. Morning, Sonal.
Good morning, Nigel. Let me start with Godrej Properties. Well, the headline numbers, if we look at YOY numbers, they look good, but that's only for bookings. So bookings are up 3% on a YOY basis, but they have declined around 40% on a sequential basis. Sales volumes, they are down both on a YOY and on a sequential basis, which is not there in the press release, but their collections did well. 69% uptick on a YOY basis, 33% on a sequential basis. The company says they have achieved 51% of the annual guidance for booking value. There's strong demand in some of their newer projects as well. So most of this number on a YOY basis has come in from newer projects. The operating cash flows have surged 120% on a YOY basis. Maybe that's the reason. That is because of the higher collections. But going with red because of that sharp downtick on a quarter-on-quarter basis. For Macrotech, it was a decent set. Pre-sales up 21% YOY, 6% sequentially. Collections up 11% YOY, 14% sequentially, and the company says they are on track to meet that 20% growth guidance. They also acquired 45 acres land for their digital infrastructure. They have entered into agreement to increase their rental income. However, the debt has increased on a sequential basis to 4,920 crore rupees. There's a 600 crore increase on a sequential basis for the company.
All right, Sonal, thank you very much for that. So keep an eye out on those real estate names. Banking and more on banking. Bandhan Bank, AU Small Finance Bank, all reporting business updates. Abhishek, tell us more.
Well, Prashant, to begin with Bandhan Bank, now they are growing the balance sheets with bulk deposits or high-cost deposits, and that will put pressure on the net interest margin. Take a look at deposits. They are up 27% YOY and about 7% sequentially. The CASA ratio, that continues its downward trajectory. It's now at 33.2% versus 38.5% YOY and about 33.4% on a sequential basis. Now, bulk deposits, they are up almost 58% YOY and 11.7% sequentially. So the net interest margin can come under pressure as we are in a high interest rate scenario. Advances growth is at 21.5% YOY and about 4% sequentially. The credit deposit ratio, that's declined sharply to 91.7% versus 96% in the same quarter last year and about 94-95% in the previous quarter. AU Small Finance Bank, we cannot do a YOY comparison due to the merger of Fincare Small Finance Bank. So on a sequential basis, their deposit growth is perhaps the highest in the banking sector. Overall deposit growth is at 12.75% on a sequential basis. CASA ratio has dipped marginally to 32.4% versus 33% sequentially, and healthy loan growth, their overall loan growth is at 5.25% on a sequential basis. Back to you.
Okay, all right. Thank you very much for that. We'll watch for all of those updates. By the way, that's important news flashing. So we can easily probably add IEX to begin with to our list of stocks to watch. because these are directions coming in from CERC, and I think they're saying that intraday contracts will maybe stopped or modified, and then there is a new stipulation in terms of some of the contracts and what exchanges are allowed to do on the power side and the kind of clearances and approvals that they're seeking from the Commission. We'll get Vivek in on this and get some more details going. But yeah, IEX should also be in focus on the back of the news on our screens. Well, with that, let's quickly recap the rest of the stocks to watch today. The ones that have positive news flow are Titan, Tata Steel, Tata Motors, Macrotech Developers, AU Small Finance Bank, while stocks with negative news flow include IndusInd Bank, Federal Bank, L&T Finance, Bandhan Bank and Godrej Properties. Okay, let's figure out what's happening in the world of commodities. We have Manisha joining in with a roundup of all the action. Manisha, so much news flow, right? From the jobs report to the Middle East and everything that's going on over there. Give us a roundup.
Oh, well, absolutely, sir. It will be never a dull day, really. But I'll start with the crude oil prices, where we have seen 10% of gains in the previous week. It is the best weekly gain since October 2022. And with those kind of gains, we are trading at a 5-week highs. Well, potentials of a supply disruption on Middle East is still a top headline, and that is continuing to support markets. Obviously, we haven't crossed 80 yet because there isn't an actual supply disruption, and then the global supplies are enough. But this is an everyday event, and markets will keep a keen eye. In the space of metals, it really is going to be about China suggesting that they are going to discuss policies to boost economic stimulus tomorrow as well. So in the next 24 hours, there could be a lot of choppiness. But the week has started on a stronger note. Silver prices are trading at a 12-year high. There is, of course, support from gold, and the industrial demand also is supportive. The recent China stimulus and measures have been supportive as well. So you are looking at copper and aluminum still holding near their 4-month highs. Steel is trading at a 3-month highs. Zinc prices at an 8-month high as well. So most of the commodities within the metal sector also continue to hold firm.
Okay, all right. Thanks a lot for that, Manisha. Well, India's most coveted leadership awards, the IBLA Awards presented by CNBC-TV18, will be back for its 10th edition later this year. The awards, which aim to honor the visionaries behind outstanding businesses, will feature a star-studded jury, which features Bharat Forge Baba Kalyani as the jury chair. Other jury members include Ashok Vaswani of Kotak Mahindra Bank, C.S. Shetty of SBI and Standard Chartered Bank's Zareen Daruwala, Asian Paints Amit, we have Apollo Hospitals Sunita Reddy and L&T's R. Shankar Rama. They'll also be part of the jury. Along with Titan Capital's Kunal Bal and Cognizant's Ravi Kumar. You can meet this most influential and credible jury at 5:30 p.m. today, only on CNBC-TV18. Well, time to slip into a short break. Up next, we'll come back and we'll have Prakash Diwan, who will be joining in to help us out with some fundamental analysis. Welcome back. As promised, we have Prakash Diwan, who's joining in to help us out with some fundamental analysis. Prakash, good morning. Well, from the Nifty pack, you have Titan that will be reacting to the update that they have put out. Your view on the stock?
Well, good morning, Nigel. So I think this is very encouraging given the fact that it's pre-festive season. So you can imagine if the festive season were to have some sort of a continuity of this salience, things could look very promising. Again, I think in markets or times like these when you have a lot of issues or skepticism around valuations and the quality of earnings and all of that, Titan stands out as a very, very formidable play. The only challenge is that if you don't hold it for the long term and it sees a little bit of a correction from here on given market conditions, you will probably have to keep averaging out even at lower levels. So you have to be ready for that. But I think the earnings profile, the contribution, the mix that they are getting, apart from jewelry, the other verticals that have started contributing, it's very positive. So quite positive on this. In fact, I would recommend people look at it and seriously add it to the portfolio, as I said, in a staggered.
Prakash, hi, morning. Good to have you on. So let's get some thoughts in on Tata Motors. After quite some time, we are hearing of a good update coming in from JLR, right? Those numbers are looking good. And you have China, which maybe is firing up, and other central banks are cutting rates. So I don't know, there seems to be enough and more money going around the world. Markets are still higher. But I don't know. I mean, the stock has done not too much this year, calendar year, compared to the rest of the market. What's your view now?
Good morning, Sarvi. So I think you said it. You know, the stock has gone into a phase of consolidation between this 900 and 1160 kind of a zone. And that was required because the surge that you saw last calendar year, it was phenomenal. And you know, a stock like this, a big you know, name like this, when it kind of moves up so ferociously, you need that consolidation so that you know, it sets a base for the next round. Look at the numbers. This is the same company where 2 months back somebody came up with a report and said JLR is past its prime. Globally, it's not going to be able to clock any good numbers. Of course, I'm not even factoring in the China revival, because the Chinese revival might not translate into JLR sales as much because the focus is so much on EVs there. Every second car that's being bought is an EV. So, you know, it's going to be difficult for them to grow at the same rate as they did in China. But the rest of the markets, there's absolutely no dearth of what acceptance they have. And at some point in time, they'll also kind of, you know, move into the EV bandwagon on the higher end with the I-Pace range of cars, the Jaguar portfolio. So my sense is it's a stock that will actually do very well from here on. But you need to kind of give it that time to have this earnings catch up. And of course, the balance sheet deleveraging will also start playing out very well at some point in time. My targets here are actually upwards of 1,1500 in the next 12 to 18 months. So it's a significant move. But yeah, you need to have that conviction that this is a company that can do. Big trigger there, the rationalization of the CV portfolio here. As and when that happens, you'll probably start seeing the market talk about it very positively.
Prakash, hi, morning. Out of all the banking updates Abhishek was telling us about, anything stood out to you?
So, you know, good morning, Prashant. What's interesting is that some of the SFBs have mentioned, have shared very high growth rates in terms of the deposit base and AUMs and all. You know, I do remember AU and Equitas particularly. Of course, AU has a little bit of a corporate action, as Abhishek rightly pointed out, attached to it. But look at Equitas. This is not a company that's been very aggressive on rates, but it also has clocked some decent growth rates. Of course, YOY again. What it tells you is that if you're willing to do the right things in terms of pricing yourself, there is enough money available to convert into deposits. So a lot of these large banks which are, you know, finding it difficult or claiming to find it difficult in terms of deposit growth, that might, you know, that logic will have to be relooked at. So we'll have to, of course, understand from the commentary of these banks, what is it that's helped them do this? But my sense is the smaller banks will start participating in a slightly better way. There's turnaround element involved in a lot of the SFBs and a lot of the small non-SFB regular commercial banks like DCB, CSB. So I would start looking at them. We're not looking at buying any of those yet. But yeah, banking within banking, you'll start having some opportunities emerge from these smaller banks.
All right, Prakash, you know, on Friday, I had moved to Anjar to visit Welspun's facility. And Mr. B.K. Goenka has spoken to us, and we'll be playing out, you know, parts of that interview all through the day. Any view on any of these group companies? Welspun Corp, you know, they currently do 1,600 crores of EBITDA, but they have the US business that's firing. The Middle East is doing quite well. And in the India business, they're touching the right spots. Ductile iron pipes, you know, Syntex will start doing well as well. Any view on any of the names? Welspun Corp, Welspun Living?
Nigel, I look forward to listening to this because it's not every day that somebody gets to visit Kutch and especially Anjar and do this on the ground kind of a work. But what I can tell you is that some of the businesses that they have, particularly, you know, their focus that has moved into water management. I'm not talking about just the pipes business, but I'm just saying, you know, the way they have expanded their portfolio, where the revenue starts coming in from multiple revenue streams. And then they have a lot of these triggers in a couple of the companies, which are optionalities at this point. So I think somewhere, of course, and let me also touch upon Welspun Living, which is seeing a significant revival. And, you know, the festive season in India will also be followed by the festive season. And the flag off is the Black Friday sale in the US. And of course, goes all the way to Boxing Day and beyond New Year. So if that were to kind of trigger some restocking, you know, this month, you'll probably see Welspun Living also do very well. It's a very sound business, great portfolio. The metrics have been a bit tepid, but things look like it. So I think most of the group companies are doing fine. There's no reason to be worried about that. What do you buy out of that depends on your allocation on a sector perspective. But Welspun Corp is probably, it stands out as one of the best. We've spoken about this at levels which are closer to 200. So you can imagine in a year's time how things have changed. And the best part about this is that these sectors or these subsectors are robust enough and have visibility. So for companies like this which have just scaled up, and I can also correlate this to Jindal Saw. I mean, they've also kind of talked about how things are looking up. The performance has been reflecting all the salient. So we are quite positive on that space, and we'll look forward to listening to you quiz Mr. Goenka on this.
Prashant, as well as Surbhi, the facility was something that really caught my attention, right? Over the years, we've seen hundreds of facilities, but this was the one that got hit by the earthquake many years ago. It had floods as well, and they've totally transformed the business out there. So it's a facility. Besides, we track markets, etc. Yeah. But the work that's been done out there, Welspun World as they call it, was, it was something to visit. I was at the plant even at 10:30 in the night, and I was surprised to see Mr. Goenka. He was at the blast furnace. Because I like to get in depth in terms of how the billets are made, etc. And I saw Mr. Goenka at 10:30 in the night at one of the facilities.
That is where, Nigel, I'm extremely envious of you, because I might track mutual funds and markets, which is not touch and feel, right? But to see a real manufacturing facility or a mining facility, I guess it's another rush, right?
That said, it was scorching hot. It was really hot. But we'll play bites of that interview later on in the show as well.
Absolutely. And, 9:30, that's coming up. So you don't want to miss it. Two companies, lots of interest. Stocks have done well. Welspun Living and the other one, of course, Welspun Corp. Right, well, the big question we are asking, of course, we've been asking, and it's been answered in some ways, is the selling which is happening in markets like India, and most emerging markets saw selling last week. Is it all headed to China, and it's sort of financing the bounce there? So some expert voices that we got over the last 3-4 days. Listen in.
I think, look, there's a lot to like in India, as you guys are extremely aware. So the combination of demographic plus productivity gains, digital inclusion, infrastructure, and so forth. I think the big picture in India continues to look very favorable. I do think if China is going to follow through on its stimulus promises, which we may see as soon as next week, it's quite likely that some of the money that global investors have put to work outside of China, be that in other emerging markets or other parts of Asia, probably gets pulled back into China.
Even though flows to India funds have definitely waned, they haven't gone negative, and I think India remains in quite a healthy position. It looks to me, at least from this week, that investors were pulling money out of liquidity funds in Europe to fuel this rotation.
What we've seen so far is a commendable delivery on the monetary policy side. We've seen some direct stimulus at getting the equity market animal spirits back alive, and certainly the retail investor has followed through on that. What will differentiate this one is if in the next weeks and months we get some clarity from the Chinese government, from the key policymakers in the Politburo, as to the magnitude and the scale and the deployment of a large fiscal package. Because let's remember, I mean, China's single biggest problem that it faces at the moment is immense oversupply on the real estate side. And you need a sizable fiscal package aimed squarely at local governments to be able to digest that. In other words, buy it off developers and turn it into social housing projects.
All right, time to slip into a quick break. Up next, we'll have Avni Bhatt as well as Sudeep Shah, who's waiting for us to give us their technical ideas. Stay with us.
Okay, welcome back. There's 9 minutes to go for the pre-open session, and let's get some technical trades out on the table. Avni Bhatt and Sudeep Shah are with us with what they want you to do. The GIFT Nifty is indicating a 90-point higher start. Avni and Sudeep, good to have both of you here. Avni, you go first. How should one approach things? And if you are starting 70, 80 higher, would you give it an hour, 2 hours before you go in, or what's the trade?
Good morning, everyone. So yes, Nifty is opening with a gap up, but it's not the opening, but the close that matters, and it still remains to be a sell on rise market. Right now, all the technical and derivative parameters have turned highly oversold, and OIPCR has come down below 0.5%. So a dead cat bounce is on the cards. And on the upside for this particular bounce back, the immediate resistance is at around 25,200 to 250 area, from where we could see another round of sell-off coming in. So on a gap up opening, I would suggest wait for about at least half an hour to take up any trade. Upside is up to 25,200 to 250 area. In case if Nifty comes to that level, it will be a sell at that level for a target of around 24,900 on the downside, and one can keep a stop loss of 25,350.
Okay, all right, Avni, got it. Thank you very much for that. We also have, of course, Sudeep with us. Sudeep, morning. Let's get your thoughts in considering the big sell down last week. Would you look at buying, or would you wait for more stability? What are the critical levels for the Nifty and the Bank Nifty that you're tracking?
Good morning, Surbi. So we see post this fall of 1,000, 1,200 points in the last week from higher levels, and of course it's because of the global cues, and the cues have not yet settled. So I guess it's going to be a topsy-turvy market, and every incoming information is going to have a lot of volatility on the market. So I feel it's better to be a nimble-footed trader here at this time. And on the downside, 24,800, 24,850 zone will act as an important support zone considering the option writing data, and as well as critical Fibonacci retracements at that zone. So I feel 24,800 as of now looks to be a decent support. On the upside, 25,200, 25,230 positionally needs to be cleared for at least some kind of a rebound formation, or for us to have some comfort that yes, from the current levels, now we could start adding up stocks in a step-by-step manner, so in a phased manner. So yes, from a Nifty standpoint, 25,200, 25,250 will act as an important resistance. From the Bank Nifty perspective, 51,800 now remains an important resistance. Now, this level has to be crossed on a closing basis and not just on an intraday basis, because last couple of days we have seen 51,800, 51,900 kind of not being able to be breached, and we've seen selling pressure from higher levels. So 51,800, 51,900 now needs to be crossed on a closing basis. And on the downside, 51,000, 51,100 now remains an important support.
Got it. All right. Sudeep, you go first. Tell us, what about individual stocks? What are you tracking?
Morning, Nigel. Nigel, I feel pharma, healthcare, IT, as well as metals, all these spaces on dips looks to be a good buy. So one stock from the pharma pack, which is Divi's Lab. Now here the stock has been in a considerable uptrend on the weekly charts. On the daily charts, if we see last 12 to 15 sessions, the stock has been in a range between 5250 and 5500. And even when the markets have broken down from higher levels, this stock has held to its positive trajectory, and it's kind of witnessing support at all dips. So I feel this could be bought with a 5350 stop loss on the downside and a target of 5550, 5600 on the upside. The second stock which looks quite promising is Nalco. So in the last several sessions, we have seen a good up move in Nalco, and specifically in the last 3 sessions, the stock has held to its support zone of 215 despite some kind of spikes on the downside. So this could be bought with a stop loss of 215 on the downside for a target of 228 and 232 on the upside.
And Nalco will try to get in the management in a couple of days here on CNBC-TV18 to get us an update about how they're doing fundamentally. So thanks for that, Sudeep. Avni, coming across to you. Do you have some stocks for us, some interesting picks?
Yes, good morning, Nigel. So after last week's mayhem, I think it is wise to stick to resilient stocks that have performed well in spite of all the volatility that we've seen last week. And so the pharma and healthcare space is going to remain in focus going ahead until and unless this volatility settles down. So the first stock from the pharma pack is Sun Pharma. in spite of all the volatility and minor profit bookings, the stock has not even looked back at its 20-day exponential moving average on the daily charts. And minor long unwinding has been seen of less than 1% during the week, but major longs have been still intact. So we go for Sun Pharma for a target of 1965, and most probably in this particular month in October series, we may see Sun Pharma test around 2000 levels also. And one can keep a stop loss of 1870 on the stock. The second stock is from the healthcare space, that is Lalpath Lab. It's a breakout trade on the weekly charts, and so it's a preemptive trade. Lalpath Lab, we can buy, it closed at around 3495. We can target around 3680 on the upside, keeping a stop loss of 3395. And lastly is a little aggressive bet, which is Bank of Baroda. So Bank of Baroda is in fact on the verge of a breakout above the 252 to 255 congestion zone. And so again, this is a preemptive trade. It closed at around 250. One can initiate a long position in this, keeping a stop loss of 243 for a target of 263 and 275 on the upside.
Okay. All right, Avni, thank you very much for joining in. You have a good day, and we look forward to connecting again soon. Let's take a break on that note. We'll come back on the other side. Then we'll have the pre-opening rates. Also, we'll get chatting with Nitin Agarwal, head of BFSI research at Motilal Oswal Financial Services. So many of these Q2 updates have poured in. What do we make of it? Which are the outliers? We discuss all of this and more in just a minute. Welcome back. So the first of the rates will start kicking in any moment. Remember, the implied open was suggesting that we'll have a bit of a bounce, a 70, 80 points bounce. And now that we're getting in the rates, there you go. The Nifty looks like it wants to start with a pullback of at least 100 points. But the question is, will it be durable? Will this sustain or not? We'll get more rates as and when they settle. But for the time being, let's also look at some F&O trades. We have Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, to give us a heads up on it. Chandan, good to have you on. So let's get the trades in. Are you playing for a bounce?
Good morning, Surbhi, Prashant and Nigel. Thanks for having me. So talking about the Nifty, it witnessed profit booking decline in last 5 trading session and has been making lower top, lower bottom as bulls took some breather with hurdle at 26,277 and corrected by more than 1,300 points. So structure is slightly weak, and we believe that till index doesn't negate the formation of low rise, lower lows, it would be tough for the index to hold at higher levels. So as of now, I'll closely watch 25,200 zone. If market manages to hold above the same, then only we may find some stability. Otherwise, bounce could be sold for the downside target to us, 24,850 to 24,444, which is 38.2% retracement of the entire up move last 5,000 points. Talking about Bank Nifty index, it already corrected by more than 3,000 points, and key support goes at 51,250. So that may provide some cushion, but till it remains below 51,750, bounce could be sold again. So expecting some intraday bounce, but concern and question will be whether the bounce is being held or is going to be sold. That we need to keep in mind. Now looking at the stock specific, first that is buy on Lalpath Lab. Major trend of the counter is positive. The stock is holding well above its 50-day mark. So one can buy with support of 3,400 for an upside target to us, 3,600 zone being a defensive and the safe play in this market. Second trading area, that is buy on Infosys. The stock is holding well and Nifty IT is finding the stability even in this market volatile swings. Infosys has seen sustained put writing, and I believe a small follow-up could trigger a short covering move led by fresh buying interest. So one can buy with support of 1865 for an upside target to us 2,000 marks. Last trading area, that is sell on Aarti Industry. The structure of the counter is weak. It has been making lower top, lower bottom. Every small bounce is being sold with built up of short position. So expecting further weakness in the counter, one can sell this stock with hurdle of 566 and it can drip down towards 535 zone.
Okay, all right, Chandan. Thanks so much for joining in. Wishing you all the best with regard to today's trading session. Well, let's get Prakash Diwan back with us. Prakash, thanks for waiting by. I wanted your view in the IT space. Everyone's been talking about metals, but that's not for the faint-hearted, if you're looking to play China. But the IT index has been holding strong. And Infosys out there has been, it's close to its 52-week high yet again. What do you like from the IT pack?
So I think, Nigel, while yes, IT has been an outlier, if you really ask me, I thought once banks come center stage in terms of a revival of interest, IT would take a backseat. But it hasn't happened, which means that there could be some positions that are still building up in anticipation of things looking very positive in the US market post the November election outcome. And we're just about 2.5, 3 months away in that sense from new contracts getting shaped up for the calendar 25. So if that were to take center stage and things come back in terms of business volumes for most of the larger players, you'll probably see that follow through. But I would still refrain from adding anything in IT at this point because, you know, the valuations, even after whatever has happened, are fairly high. I mean, you had a Tech Mahindra available at 1,200, which was fine. 1,600 doesn't really excite me. Wipro, the same thing. The move's been fairly strong. So give it some time. You could buy IT as a fair, fair weather kind of a allocation, but you would have to buy it on dips. You won't make money if you buy at these levels. There's nothing which is happening dramatically different for them to revive. Let's wait for the numbers, just a few days, and you'll start seeing numbers. So Infosys does seem like having come up with something which is getting the street excited. And I think it's in anticipation of an improvement in the numbers, particularly margin improvement, which most of the analysts talk about.
Okay, all right, got it. Thanks for joining in, Prakash. Good to have you on, and we look forward to connecting again later this week. But let's address all of these Q2 updates that have been coming in from the BFSI space. We'll get to the expert in just a bit. Before that, let's look at the numbers. We have Abhishek joining in with the kind of Q2 previews we've seen so far, the key takeaways, and what's the big picture that these Q2 updates are throwing up. Abhishek.
The big picture that Q2 updates are throwing up: pressure on net interest margin and fight for deposits. Now, the fight for deposit is very, very high given the fact that overall deposit growth is on the lower side, but the bulk deposit is creeping up, and that's actually a worrisome factor in a high interest rate scenario, given that pressure on net interest margin will come in due to this. So overall weak updates have come in from many of the lenders. The fight is on for deposits, as I mentioned earlier. They are coming in at huge cost. You know, many of them are seeing their overall bulk deposit grow higher than the deposit growth itself. So that will come in at a cost, and that will put the pressure on net interest margin, because the best of interest rate with respect to net interest margin is behind, and you cannot grow your unsecured or high yielding retail portfolio as well because of RBI cautiousness that is there over there. So loan growth has remained tepid for many of them, as the focus has clearly shifted to credit deposit ratio. Now, we broke the story in December 2023 that credit deposit ratio would be lowered as guided by RBI to many lenders, and we are seeing that happening. So majority of them who have more than 85-90% kind of credit deposit ratio are facing the heat with respect to credit deposit ratio declining from them. CASA ratio continued its downward trajectory as expected, as people are shifting away to high interest rate bulk term deposits. So super numbers or strong numbers have come in from AU Small Finance Bank. The overall deposit growth is more than 12% on a sequential basis. Weakest loan growth is seen for J&K Bank, a mere 2.5% YOY growth and just 0.7% sequential growth. Even Ujjivan Small Finance Bank, the overall loan growth is a bit weakish over there, less than 1% on a quarter-on-quarter basis and about 14% on a YOY basis. Now, asset quality deterioration continues, especially for unsecured and the MFI players. They are seeing deterioration in their asset quality. Back to you.
Okay, all right, Abhishek, thanks very much. That's helpful to put it together, gives us sort of a heads up on what the different issues are at play. Let's take this forward with Nitin Agarwal, Head of BFSI Research at Motilal Oswal Financial Services. Nitin, good morning. Good to have you on. So, Abhishek, nicely highlighted a lot of the immediate concern and this fight for deposits that we've been discussing for a while, right? Let's get a little more granular, and I want to pick up RBL Bank's example just for our viewers. It also, we need to understand how to cut and dissect the numbers, because if you look at the headline number, the deposit mobilization year on year seems very strong. It's 20% up, even quarter on quarter. There's almost a 6.5% growth in deposits. But then you have to see at what cost are these deposits coming, because the loan growth, again, quarter on quarter has tapered down to just 1.5%. So how should we read some of these updates that are coming through? Because even if the deposit number is rising, what impact is it having on growth? What impact is it having on margins?
Yeah, sure. Thanks, Obi. Thanks for having me. So starting with RBL, so clearly deposit growth is much stronger for the bank, but we also need to see as to how the loan book is positioned, because the stress that we are looking at right now is so much more on unsecured than in any other retail segments or corporates, and which is where banks are taking a likely cautious view in growing their books, and specifically for RBL, like almost 30% of the book is in unsecured loan segments, and they have a significant exposure to MFI and credit card. And these are the segments wherein the delinquencies are running relatively elevated. So to that extent, I think that explains why the loan growth is relatively more muted versus how the deposit growth has been. And of course, we'll get to know the segmental color when the bank report numbers. But this is my reading from looking at that dispersion between the loan and deposit growth.
You know, that's specific to RBL, but let me ask you a slightly wider question to get, the distilled wisdom. Let's say all the updates we've seen the last 2-3 days, if I were to ask you which are the lenders that are managing to win the war on deposits, the fight for deposits, without hurting loan growth and margins too much, which ones do you think perhaps stand out? Any names?
See, system business growth is moderating. So you can expect a moderation in business growth for most banks. Though within our coverage, if I look at, amongst the larger banks, ICICI Bank is relatively well positioned. We have seen bank delivering 18-19% loan growth, and we expect now loan growth to sustain anywhere around 16-16.5% for this year, which is still relatively healthier when you compare it to how the trend has been for other private banks and as well as the system. And alongside, within mid-sized banks, if you look at, Federal Bank is doing a pretty good job so far, like one of the better loan growth and the deposit growth we have seen on most of the quarters. And even AU Bank. Last quarter for AU Bank was relatively more muted, and as they deployed liquidity, but this quarter they have bounced back. And there has been a pretty good traction on the deposits that we have seen this quarter. But on the margins, the second point that you mentioned, I think while at the system level, we are looking at continued moderation in NIMs at a more calibrated pace, we are already seeing that the pace of NIM calibration is coming off every quarter. But that trajectory, that directionally, it will continue. And probably as you come close to the turning point, RBI cuts the repo rate, then sometime in FY26, you will at least start seeing NIM expansion for some of the banks which are having a fixed rate book. So to that extent, we think banks like AU Bank, IndusInd, and Equitas, they will likely benefit on margin front in FY26.
Okay. So yeah, later this week on Thursday, RBI also meets, right? And we have the RBI decision. So no change in no cut is expected, but maybe a change in stance. Most of the developed central banks are sounding more dovish as compared to where they were a month and a half odd back. So we'll see. Nitin, we also had this phenomenon last week of FII selling, right? And on Friday we put up this data for Thursday. Thursday was that 15,000 crore net FII sell number. That bulk of the selling happened in 3 banks. Reliance and an L&T. So ICICI, HDFC, Axis, these are all down between 6 and 9% from their recent respective highs. In your coverage universe, which ones are a buy?
I think, yes, there has been a good selling. Markets are going through a phase of uncertainty. Geopolitical risks are running pretty high. And but we continue to remain quite constructive on banks, especially the private banks. In fact, as we speak, today in our strategy note, we have upgraded our stance on private banks, wherein we believe that these banks are well poised to deliver you mid-teens earnings growth, and the valuation still seems very reasonable. While the stocks have corrected as a risk-off is playing on, but we remain positive on ICICI Bank and HDFC Bank amongst the large caps.
Okay, all right, Nitin, it's always good to hear your thoughts. Thanks a lot for stopping by and filling us in with your insights. But let's get in Nimesh. He's here with the Standard Brokerage report that he's picked up. Nimesh, take it away.
Hi, Nigel. So today's Standard is on IT names. A couple of stocks where JP Morgan has upgraded the stocks to overweight. L&T Mindtree to an overweight, and they've raised the target price on L&T Mindtree to 6,900. And on Emphasis, they've upgraded the stock to overweight, and there they've raised the target price to 3,400. Now, JP Morgan believes that both these names are a good proxy play to the banking and financial services, and that is a vertical which has done well over the last 3 months. In the US as well as in other geographies as well, and that could mean incremental positive revenues for these 2 companies. Now, Fed rate cut could also mean a recovery for the mortgage in the US, and that's been also under pressure for the last many months. And if that has to improve, there could be significant tech spends over the next 12 to 18 months. And that is where both L&T Mindtree and Mphasis could be the biggest beneficiaries, because L&T Mindtree has got a 35% exposure and Mphasis has got a 59% exposure to the BFSI segment. And within that, they have the highest in the US banking and financial services space. So on back of all this, an upgrade on both these names to overweight. And L&T Mindtree, as I said, they've raised the target price to 1,600 and an Mphasis target price is to 3,400. On both these names, they've raised the EPS as well as the target multiples, and hence they expect an upside on both these names on the back of the recovery in the BFSI space.
All right, Nimesh, thank you very much for that. So keep an eye. IT services stocks have gone up and gone down multiple times over the last couple of days as we come into this earnings season, but lately it's been more up. Last week, for example, IT and metals were the two areas which were higher. First rates, 0.4% up on the Nifty index, 25,118. So, that's a decent start. 0.4 on the Bank Nifty as well. We're at about 51,680, 670 or so. Sensex up 0.5%. Mid-cap index is starting about 0.5% in the green as well. Market breadth, 1,100, 1,150 higher and about 700 lower. So that's the picture at this point. So it's 100 odd points on the Nifty to begin the day with, above 25,100, 25,120 basically. And look at the heat map on the Nifty. Just about 4 or 5 names are in the red, and everything else, at least to begin the day, is starting in the green. Surbhi.
Absolutely. So we do have that move of about 0.5% on the index continuing. Talk about individual stocks. I think ITC is straight away the mover to watch today. Some traction coming in over there with a gain of about 1.5%. Tata Motors, we were just discussing the JLR trends with Prakash a while back. Those numbers look good, working well for Tata Motors. Bajaj Finance, SBI Life, Kotak Mahindra Bank, SBI. These are some of the BFSI names that are starting off on the positive side as well, about 1% up. ICICI Bank as well, 0.5% up. So HDFC Life. Generally speaking, it looks like the entire BFSI complex to begin with is on the upside. Some traction on names like Infi, on Hindalco, again, some of the green over there. By the way, not too many stocks right now negative on the Nifty. The bounce back is continuing. Look for Cipla. Relatively speaking, the so-called safe haven, which is FMCG and some pharma. Sun Pharma, Cipla, very muted right now. Lever is actually not showcasing the kind of bounce we're seeing on ITC. These are more muted, but otherwise, for now, it's a positive start.
Well, that's right. The stock that's doing well is Heidelberg Cement, because there are reports that indicate, yet again, we've heard this multiple times in the last 18 months, but there's a news article, unconfirmed though, that says that maybe it's on the block and there could be buyers. So we'll have to wait by for that. The stock actually has been a relative underperformer. For the time being, it's up close to around 10%. The other couple of names that are doing quite well today, you have DB Corp that's up close to 5%. So good move is what we're seeing out there. Volumes yet to pick up on that stock as well. So keep an eye out on that name. A few other notable movers. NBCC, well, it's up close to around 3% to start off. Macrotech Developers up 3.5%. So good start is what we're seeing on that one. And Neogen as well, up close to around 3.5%. So a few names that are doing pretty well from the broader markets. On the flip side, a few of them are getting clonked actually. So we'll pull them up for you on the screen. Let's get in a few. Rossel India, that's down close to around 6%. Don't know what's going on there. Volume's not very, very high. PC Jewelers is down close to 3.5%. It had that big run, and now it's coming for some profit taking. Volume's picking up on that one as well. And Jubilant Pharma as well. The stock is down 2.5%. But green to kickstart trade, we'll have to see how long we can sustain these levels. For the time being, both the Nifty and the Nifty Bank are trading above their 50-day MA.
No, absolutely, and there is a lot to track in terms of individual names, etc. as well. So CDSL, by the way, if you can have the name up, is the top volume-led gainer right now. The stock's at about 1420, and it's got large volumes in it for this point in the day. Mphasis is at number 2, spot 3% higher, 2940 on Mphasis. So out of the gate, looking strong. Heidelberg, Nigel mentioned, that's a big pop coming through, 12% now. So 245 or so. There's Lodha Macrotech, which is up 4. JK Paper is coming up with about a 3% pop. Aventil is up 9%. The stock's just under 200 rupees and it's got volumes right now as well. There's Natco Pharma, which is up 3%. And what else? You've got AU Bank up 2-3%, Senco, and you'll hear from the management in a bit from now. Senco is up 7%. So that's a big pop coming through, almost 1,500 on Senco. And actually, we should just look at PN Gargill as well and how that is opening up and see if that's the other management that you will hear from in a bit from now. I can go down the list, but then volumes start to taper off. This is, bulk of where the volumes are right now. On the downside, apart from what we mentioned, DMart is down a little bit more. DMart saw very large volumes on Friday, the highest in at least 3 years on Friday, and and it's down another 2% or so, 45,000 shares, not small for a name that size at the word go. And KRN Heat Exchangers down 3%, that's a recent listing. Titan, of course, is down about 2%. Titan outsized volumes in it. Varun Beverages is down about 3%. Stocks at about 562, and so on and so forth. So that's the overall picture right now.
So Aventil, that's a smaller cap company that's now become 4,500 crores of market cap. They came out with their numbers, so that I guess is one of the reasons why, in fact, the stock is up, and the margins as well fairly good. I recall we covering this company, 5-6 years ago, when they used to do close to 50-60 crores of revenue in a year. In the past quarter, they did 75 crores. One of those defense companies that they were putting in money and doing a lot of research, and the numbers are not showing up. Now I think those numbers have started showing up, so explains why that one is moving up and volumes high. So we're just addressing that name.
Absolutely, and we'll try and have them up on the back of the numbers a little later on the channel as well. Gautam Shah is with us, founder and chief strategist, Goldilocks Premium Research. Gautam, good to have you with us here. Thanks for your time. So we've seen a 1,200 point sell-off in 4 days flat, Gautam. And I was saying earlier that these are part of the game, but we're not used to these now. So it seems the shock seems a little bit larger. What's your sense? Price structure, price action, where are we near term?
Good morning, Prashant. I think that's the problem, that we have now been wired to believe that every time the market corrects, it will find support levels quickly, turn around and go on and make new lifetime highs. But if you look at the trading action of the last 7 days, what's really happened is that it's been an India-specific correction. Most other markets in the world, whether you look at US, Europe, or rest of Asia, actually have been quite well. So it's been a completely out-of-the-box kind of a decline for India. Now, you could allude it to many factors, the return of China, geopolitics, FII selling, a lot of factors can be looked at. But honestly, looking at the charts, it does seem as if this is not a garden variety correction. Because I think last month you had a scenario wherein the large caps and the headline indices did extremely well, and the small caps and mid caps did absolutely nothing. And the manner in which the indices have come off, the fact that some key levels have been broken quite easily, I do get some sense that the recent high could be a short-term top. So while there is scope for some pullback, which is happening today, and it could extend to maybe at best 25,500, 25,600, I do believe that the markets have got into a multi-week, maybe even a multi-month consolidation. Not to say that we will collapse. I think the domestic liquidity angle will keep the market protected, but I'm pretty sure that we are not going to make new highs in a hurry. And I don't see leadership, because banks are back in a difficult space. Reliance has lost its way almost completely. It's just the IT index which is hanging out, and the metals index which continues to be positive. But on an overall basis, the market has got internally weak, and therefore the next few weeks will be challenging.
Okay, so next few weeks will be challenging. Maybe this is not over. I'm very curious to understand what's a garden variety sort of correction in China. Gautam, morning, Surabhi here. We've heard of spinning tops and this, head and shoulders and all of that in technicals. What is garden variety correction?
No, from a Chinese perspective, I think we've been in a downtrend for 3.5 years, and from a valuation perspective and the allocation that China got over the recent years and what India got, I think it had come to a point wherein the snap out had to happen, and that snap out has happened. When I say garden variety, I mean that we are used to seeing a 3, 5, 7% sweet correction. The market scares all of us, comes back to support levels, turns around, and therefore, all is well very quickly. This time, all might not be well quickly. And that's probably the reason I'm saying that it is slightly different to what has happened in the last 12 to 15 months. So prepare yourself for slightly more difficult times and don't jump at the first sign of weakness or strength to buy the market.
Oh, that's really important, Gautam, and I'm glad that you put that on the table very clearly. Now we understand it's not a walk in the park correction. It's not a garden variety correction here in India, probably. So in which case, immediate levels, and then how do you expect this to play out? Because you're right, the market's forgotten what a real correction looks like. 5% down, and there's this gloomy feeling out there. What are you expecting next in terms of levels? Just how will this play out?
See, I think the market breadth has been weak for the last 4 weeks. I think the number of stocks which are actually supporting this market, the number of stocks making new 52-week highs, that had reduced considerably. And given the geopolitical situation and given the way crude is placed, I think crude and dollar index are two global factors which I think will play a very important role to what global equity markets and India does over the next 2 months. I feel there is a high probability of crude actually flaring up $10, $15 from here. So that's one risk which I think the market is trying to discount. But coming back to the levels, I think the 24,800 number is quite important from a near-term perspective. If that were to break, you might have to be prepared for levels of 24,000. But in the last 3.5 years, since the time we started rallying from the COVID lows, we've seen multiple times that the Nifty has done nothing for many weeks to many months. So it's not really a surprise. And I would be very happy if over the next 2 to 3 months, we just stay in this 24,000, 26,000 band, oscillate between greed and fear. What has to correct, which is extremely richly valued, will correct, and top quality will continue to sustain and continue to attract good money.
All right. Hi, Gautam. Good morning and good to see you, Ben. Let's talk about the largest constituent on the Nifty. That's the banking names. The Nifty Bank gave some promise. It gave us the feel it wants to go past the 55,000 mark, but then it's seen a sharper correction. What's the view out there? What are the markers you're looking at in the levels on this index?
Well, that's been the problem, Nigel, because every time the Bank Nifty does well, we start feeling that we are getting into a multi-week, multi-month kind of a uptrend, but it falters. And the problem is when these 2 or 3 heavyweight stocks don't sustain at high levels because of FI selling or whatever reasons people attribute to, I think that's the problem, because when the banks don't do well, it's difficult for the Nifty to run. And given the way it's corrected in the last 5 to 6 weeks, I think the structure has spoiled once again. And I would say it's a high probability of the Bank Nifty coming down to levels of 49,500. And if that were to break, you could see another 3, 4, 5% correction on that index. So banks is something which I feel, is not going anywhere. It's not going up much and it's not going down much. But I think the two major pockets that we like in today's market, where I think one can look at longs, are metals and IT. I think these are the two places to hide while this difficult corrective phase continues for a while.
Metals and IT are hiding spots. Okay, let's talk about individual names, Gautam, if you will. From a positional point of view, what looks good?
Well, I think the entire metals basket saw a lovely breakout 10 days back. I remember, last month we were discussing that the fundamentals were not great on the ground. So how can the metals index do well? And then you had the China news flow coming in, and that pretty much triggered the breakout, not just for metal stocks here, but worldwide and including the China comeback. And I do believe that the metals index has the potential to deliver 25% upside from current levels over the next 1 year. So if you look at all the top stocks, led by Hindalco, JSPL, JSW Steel, SAIL, Nalco, Tata Steel, the entire set looks very good and I think is likely to stand out. So if you're booking profits in some other pockets of the market, I think metals and IT is the place to be in. And in the IT, I want to stick to top quality. I don't want to go to grade 2, but I think Infosys, TCS, HCL Tech, Tech Mahindra, I think are good pockets to be in.
You mentioned crude, Gautam, crude and dollar, two key things that you're watching. Tell us the other indicators. I mean, on China itself, I don't know what you've seen on the charts. I mean, the Hang Seng, for instance, has pulled back 32% in the last 1 month. It's a ferocious comeback, right? Do you see that kind of strength continuing in the Chinese market? And what else? I mean, what else could be very critical global indicators to track from our perspective?
See, I think this China comeback is durable. With whatever little I have an understanding on China and Hong Kong and from the charts, I do believe that this underperformance had to get corrected and it's now happening. And no wonder the FIs are excited because they have a market which is, very, very cheap even at these levels. They have their own issues, no doubt about that, but it's still cheap in the global context. And looking at the charts, I do believe that the Chinese market can appreciate 20-25% quite easily, even from current levels. There could be some near-term correction, but the overall trajectory is clearly up for China and Hong Kong. And I think if you look at the crude, I think
65 has been a sort of a base level for crude for the last 1 year, and we've rebounded from that multiple times. And given the geopolitical situation, which can easily get out of hand because nobody really knows how that's going to pan out, but the crude chart is telling me that you could easily go back to levels of 1995. And if that were to happen, I think it's a key risk for India. And if you look at dollar index, it's had a beautiful inverse correlation with the S&P 500. And with the comeback of the dollar index from levels of 100 last week, it looks like, even this index is going to move towards 106, 107, maybe even 110. If that happens, I think the US markets will also correct, because US markets have shown a lot of resilience in the last 1 week and handled the geopolitics really well. It might not be the case over the next 2 to 4 weeks.
Okay, all right. Well, Gautam, you're sounding fairly cautious on the Indian markets early this morning. Crude spiking, dollar index moving up. Well, it'll be good if we can hold on to the 24,000 mark, I would say, give and take everything if this has to come through. Let's talk about the biggest party in town. It's been in the mid-cap space, right? What's the view on those indices? Because if the headline index is going to be under pressure or going for a bit of consolidation, then we could see a bit of a pullback out there. And that's been the index that's really run up. So your view?
I'm quite concerned about the mid caps and the small caps, to be honest. We put out our big picture report yesterday, wherein we put out so many pointers as to why we feel that mid caps and small caps could potentially be topping out for the near term. And I think they need a multi-month correction or a consolidation at least before things can get back on track. We've all discussed it in the last 1 month that based on narratives, stocks were doing well. Based on Excel sheets of the next 10 years, stocks were doing well. I think there is a reality check which is now coming up. And I think anything that is substandard in the mid caps and small caps which will come under serious selling pressure. But the top quality, the top 50 names in mid caps and small caps, I think will stand out. But the chances of a 7 to 10% correction in the mid cap and small cap space looks quite likely given all that has happened in the last few months.
Okay, so once again, since we need to pad up for the slightly longer haul, metals and IT, anything else? And now I'm asking about someone who's looking for that dip, right? There are so many people complaining the market's not correcting. So this is happening for anyone looking at medium-term portfolio creation, say the next 2 years. Apart from metals and IT, what else would you advise, Gautam?
Nothing at all, Surabhi, because, we do a sectoral analysis, and I think a lot of earlier outperformers like auto could have topped out, real estate could have topped out, PSC could have topped out. This entire basket of mid caps and small caps are looking a little weak. Pharma, we like it from a 2-year perspective, but near term, it's looking very stretched. FMCG has seen some negative signs. So actually, I don't see too many places to hide. And, the funny part is people wait for that correction. And when it comes, people back off. I mean, that's what psychology and sentiment does to all of us. But let's keep our numbers in mind. The good thing is this is not a major trend reversal. This is still a larger correction within the bigger bull market. So I think if we do nothing over the next 2 to 3 months, and if the results season, earnings season go off well over the next 2 to 3 weeks, then we are on our way, because the Nifty is still at a 24 PE. And over the last 30 years, we've never seen a major top at a 24 PE.
Got it. All right. Thanks a lot, Gautam, for joining in and giving us your insights into the Indian market. We look forward to chatting up with you rather soon. But let's get straight to that exclusive conversation I had with Mr. B.K. Goenka, the chairman of Welspun World. He says that he expects the group's revenue to triple in the next 3 to 5 years. In an exclusive conversation, he also spoke about the group's focus areas, the capex plans, and what kind of leveraging plans they're comfortable with. Let's hear out a few excerpts from that conversation. What the market wants to understand is what is your vision ahead? Because you seem to be hitting the right spots. But what kind of delivery are you looking at in terms of revenue for the group, in terms of market capitalization? Where do you see the group headed, give and take all the investments that you've made across textiles to piping to infrastructure as well?
So 3 years back, Nigel, we had a visioning exercise at a group level, which we do every 5 years, what we have to do next 5 years. And we saw that we have been so much concentrating on export market, global market, and when the whole world is looking at towards India, and we came out with a new coin that Har Ghar Se Har Dil Tak Welspun. And when we're in so many products, so many different activities, and India is a right market.
Yes.
And we said that we want to be in every heart in India with every Indian, And can we touch 101.4 billion people heart somewhere or the other when we are making Welspun products across our different range, different companies, what we are doing. So we are very clear that we came out with a clear vision of 3G, the growth with governance, and with the green. When I say green, it's sustainability. So we are very clear that how we can become 3x from here, and that growth is only possible when you have right governance and right kind of sustainable effort across around you, whatever you're doing.
I mean, I'll press you a little bit on the governance as well as on the green aspect, later on. But tell us about growth. When you talk about going 3x, what should the group revenues look like? Currently, you're around 40,000 crores odd in terms of revenues, while the group market capitalization is roughly around 45,000 crores. So where does that number go in the next 2 years from here?
So market capitalization is the outcome of whatever we are doing. Let me talk about the growth plans. We have a very clear roadmap for next 3 to 5 years that how we can become from here to 3x.
Okay.
How we can become a 1 lakh crore group at the top level revenues.
Yes.
And we have a plan for our Welspun Corp, where we have a DI pipe, we have a large diameter pipe, we have a expansion in Saudi, we have expansion in USA, we are doing expansion in India.
Right.
And plus, we have recently acquired last year was sensex, which is a huge growth plan. And we all know that how the overall building material is. And sensex is a well-known name in the country. I mean, when you talk of a storage tank or water tank, you say sensex leke aaye.
Indeed.
So sensex is a very well, it's a synonymous with water tank.
Lovely. So we've got that in terms of a revenue. But I'll have to push you about the market capitalization. I'll tell you why. Because a promoter is normally the best analyst of his own companies. So given that currently you're at around 45,000 crores, if you can get to that goal of tripling your revenues from year on in the next few years, where do you see the group market capitalization headed? Say in 3 years from now, can you see it also hit the 1 lakh crore in terms of market capitalization?
See, as far as market cap is, as I said, it's all outcome of what we are doing. We are going to do whatever is the right thing for the shareholder, unlocking the shareholder value.
Right.
Be it through the governance, be it through the right kind of expansion, be it merging or demerging or selling or buying, whatever is to be done, which can create the values for the stakeholders and shareholders across the group. And when we are talking of 3x of top line, I think automatically it has to reflect somewhere in the market cap.
Got that. Governance, that's another point that you made. And that's something that your shareholders and investors, they're looking forward to. Because there is this perception, about various companies. And in a bull run, everyone does well. However, when the markets get a little bit tepid, various groups are left behind. So could you tell us what have you done with regard to governance or to put that perception out that you all mean business, you're going to be rewarding your shareholders, and you're here to do India proud?
So governance is a journey. It's not a one-day story, and it's we have some kind of a 3 decades history behind us. And what we want to do going forward is that each company is independent. Each company is run by independent directors, which are responsible for the growth as well as the right kind of in creating the trust. And moreover, I think it's important that each company is headed by a professional people, so that it's a clear-cut path that how the growth will coming in the future with the right kind of people around you, because ultimately it is people who matters.
Got it. And to get to this revenue growth targets that you're talking about, you'll have to put down money, right? And people get a little bit skeptical when a promoter comes in there, puts in big capex. So what's the big capex plan you've lined up for the next few years?
So as you know, I mean, overall, if you see the capex plan, what we have already announced in various companies at a group level, we are doing around 10 to 12,000 crores in our home textile, in our pipe businesses, in our Welspun Corp. And as far as Welspun Enterprise with infra companies, it's a different thing, which is like a projects. So expansion plan is primarily in these 2 companies, which is going to taking the shape in next 2 to 3 years. And from here, how can we, Welspun Corp can have a 3x revenue? How can we, the EBITDA can be become double from here? So that's what our plan is for next 2 to 3 years.
And when you have 10 to 12,000 crores of capex that's lined up, what is the current net debt number or the net debt to EBITDA number, and where do you see that number headed? You must be having a threshold, right?
Yeah, we have a very clear policy within the group about the debt equity, about the ratios, about EBITDA to debt. And when you see today at a group level, we have a EBITDA of around 4,000 crore plus, and our debt is less than 2,000 crores. So it's a 0.5 to the EBITDA. And I think maximum in the next 1 or 2 years, it can go to 1:1, which is, I think we are very comfortable in times to come.
Well, do catch the full conversation with Mr. BK Goenka at 4:30 p.m. here on CNBC TV18. Well, time to slip into a short break. On the other side, we'll be joined by Mr. Sen of Senco Gold, as well as Mr. Saurav Gadgil of PN Gadgil Jewelers. Stay with us. We'll put the focus on the festive season.
Welcome back. Well, it's Corporate Radar and it's time to talk jewelry, considering we are getting into the thick of festive season. And of course, there are lots of company-specific updates that have also been pouring through. So the focus continues to be on the sector. We have with us Mr. Suvankar Sen, MD and CEO of Senco Gold and Diamonds. And also we have with us Saurav Gadgil, MD and CEO at PN Gadgil Jewelers. Gentlemen, thanks very much for joining in. Suvankar, if I could just actually, before we start talking about the sector as a whole and demand trends, etc., since we have you, and I just want to, get this out of the way, because you've done some fundraise. You're raising, I think, close to 500 crores via equity capital, QIP. So just tell us that about that first. What's the requirement? What's the need? Why do you, what is your growth plan? And then, of course, that will give us a nice segue into the overall conversation on growth expectations.
We would need it for working capital. And, every year we have plans of growing 18 to 20 stores, as we have been planning for the last 2-3 years. 8 to 10 stores will be company-owned, company-operated, and 8 to 10 stores will be franchisees. So, how do you open the stores? You get the funds either from the banks or, you get it through equity. So that is what we basically would like to use for. And, in the month of August, when we saw the duty cut happening, there was a decent increase in demand, and we could see that the consumer demand for jewelry was in a very good state. So we thought that these funds will only help in our growth and expansion and for the supply chain for working capital. So that's how we would like to look at it.
Okay, so it's largely for working capital use. And also, what is the store rollout plan as of now? I know your second quarter update hasn't come in, but in general, I mean, what's the kind of broad growth expectation you're working with for this year? And the store rollout plan. Then also you had, plans to expand on the lifestyle side beyond just the pure jewelry segment. So will some of this money be used for that as well?
Yes, surely, because we've opened about 4 to 5 stores on our new brand that we've launched called sensex, which is going to focus on lab-grown diamond jewelry, leather accessories, and perfumes is something that we are launching as well. So those will be certain stores that we will open either exclusive or within the store also. We'll keep a few products. So that is there. Plus, we've in the Q1, we had opened 4 stores. In Q2, we are opening we've opened about 4-5 stores. And that's the whole thought that, throughout the year, we should be able to open about 18 odd stores. So there are many on the pipeline. The festive season is around the corner. So that's how, and in terms of growth expectations, there have been a lot of, I would say every month was kind of some event or the other happening, whether it be a duty cut, whether it be a gold moving on to all-time high. So our growth expectation would be, as we began the year with the 18 to 20% growth, but 15 to 18% growth, around 18% is what we are hoping for, because the gold price itself in value terms has gone up. So that is what is going to keep us going. So that's what, we've been looking at.
Gentlemen, good morning. Prashant here, and good to have both of you here. I mean, the segment, the jewelry retail segment is one space which markets are bullish in a pretty secular way. And Senco, of course, has been the poster boy in that sense from the smaller players list. And Mr. Gadgil, I think you also sort of entered the space from a listed perspective. So very interesting. Just a quick word, if I can start just to complete that point earlier, Suvankar. What is the expansion that you talked about, right? You've got 165 stores, about 100 which are company owned. This expansion will be largely in the eastern part of the country again?
Yes. See, we've been, focusing in a manner. We need to understand where our strengths lies, and the low-hanging fruits where the probability and possibility of a higher return on capital would be there is through east. So around 50 to 60% of our expansion will be in east, and about 25 to 30% of it will be in North India. So that's where our geographically we are focusing upon, and the remaining 10-15% will be in the western and the southern markets. So this is where and how we would like to grow.
Okay. All right, let's get to some of the festive related demand and what we're seeing out there on the ground. Saurabh, if I can come to you to tell us what have you seen. I mean, this is officially we've kicked off a festive season with Navratras last week. What's demand been like and what can we expect?
The Q1 results which is announced today, and Q1 has been very positive. We have shown a great growth both in volumes, value and impact. And I think post that the market looks to be good. Like Suvankar just mentioned, every month has been a month of highlight, and August duty cut had been seen record sales pan-India. We had seen a huge jump in sales also in the month of August. September again was the month of Ganpati, a festive month, and that was the month when we got listed. So it's been a good run till now. And the next 2 months, being the month of Dussehra and Diwali, should really be the months of extremely good sale across all the stores. The price hike which has been recently seen has not been a dampener as far as demand has been concerned. I think that the old gold exchange factor could go a little up as people would prefer to use old gold as a currency to buy new jewelry. But the demand would remain strong. Festivities like Diwali have always been a highlight for the jewelry industry. Consumers not only buy it from the point of view of festivities, but it's an emotion, it's a feeling. And I think the same would be seen this year. The start for the season has been good. It's just been 3 days of Navratri, but it's been on a positive start. And I think that the season looks good ahead.
All right. Hi, Saurav. Good morning and good to see you, Ben. Could you tell us what's the gain on the unhedged gold and what proportion of your gold is unhedged as of now, and how do you see that number changing?
Unhedged gold, is reduced drastically now because we have implemented the hedging policy. We have moved to gold metal loans. So I'll talk on detail on the Q2 update. But to summarize it, we have been moving, as mentioned in the IPO plan, to gold metal loans and MCX. So we would be around 80-85% hedged as we speak.
Got it. All right. Give us a couple of more details then. What's the revenue share from the studded segment and where do you see that number headed?
So revenue share has been 10-11% studded out of the total revenue, and that we've seen is growing at a decent rate. The aim for that is to reach, upward of 13% for this financial year. It's on track. The sales have been good. We have been adding a lot of categories also to the studded category, to the studded segment. Diamonds, precious stones have been there. We're also getting a foothold into the Kundan side, Polki side. So all this should be adding to the aim of reaching 13% plus this year in studded category.
And I think, Suvankar, you also guided earlier that you want to take up the studded share by 1 percentage point every year, right? I think that's been the guidance which you've put out. Just a quick word on the festive season and expectations thereof, Suvankar, for you at Senco. I think you'll have to unmute yourself, Suvankar. I think we can't still hear you.
Yeah, is it audible now?
Yeah.
Sorry.
Yeah. Yes.
So the festive season looks positive. August was a great month. But when we came to September, the first half of the September was a very good kind of a demand. But towards the second half, when the gold prices started moving up a lot, we could see that consumers had gone into a wait and watch mode. But what we are trying to do, through various schemes and offers is taking money in advance, saying that, when the festive season, the Navratris have started and the Diwali Dhanteras time will come. So then the consumers can pay the money in advance, and then later on, whether the price becomes lower or the price at which they had booked, whichever is lower, the consumers would get the benefit of that. So we are trying to come up with various payment schemes and making it much easier for the consumers to buy. And also one more thing we need to keep in mind is that the price is moving up. The need of the consumer is to provide and get the jewelry which is within their budget. So the bridal wedding season will start in November. So we are planning to make jewelry which is lightweight within the budget of the consumers. Then the everyday wear jewelry in diamond and gold, that is something that we are focusing upon as well, because many people look forward to the season to buy their annual jewelry purchase, whether it be for working women or their purchase for the home, traditional design or modern. So we are trying to provide all kinds of necessary variety to the consumer. And more interestingly, the men's jewelry, that is 15% of the market that we are all focusing upon. And, Aham is the brand. So we will be launching new designs. Suddenly you realize during the festive season that men's of all ages, not only young, but even middle-aged, people, they start buying their chains and bracelets for the festive season. So we are very conscious of what all will be needed for the season, and we are providing accordingly. So that's how it is.
Got it. Suvankar, I think you'd mentioned that the lab-grown diamond is getting a lot of continuing coverage, right, in the media, especially with regards to what's happening in the diamond sector, lots of job losses and stress in that part. I think you also mentioned late September that it is taking a toll, but for the segment of diamonds that you're operating in, it's not really made much of a difference. Is that correct?
Lab-grown diamond makes a lot of sense when the size of the diamond is bigger. So any diamond sizes which is 50 cent or 1 carat and above, that's where you can see a big price difference between the natural diamond and the lab-grown diamond. But the segment is diamond jewelry that we are mostly working upon. Almost 75 to 80% of our diamonds are, it's like those small diamonds that you see that is used in the jewelry, which we call it -11 or -8 sizes. So 1 cent, 2 cent, 3 cent, 4 cent. So those small sizes. So that is something which has not got affected by the lab-grown diamond jewelry. But at the same time, these lab-grown diamond jewelry is becoming like another niche segment for, say, either a destination wedding or, your fashion. Someone might have a solitaire of a, round diamond. They want various shapes, princess and pear and this and that, heart shape. So then they can try out their fashion aspiration through lab-grown diamond. So this is how that segment is kind of playing out for the consumer.
Okay. All right, gentlemen, good to have you in to discuss the trends and, of course, the growth projections, which look all very, very promising for some of the listed jewelry plays here in India. Thanks for joining in. But from jewelry, we are moving on to something equally exciting, if not more. I mean, the cutting edge of new technology, semiconductors, and, of course, what the country is hoping to achieve, the kind of work that's already underway. Now, India's semiconductor manufacturing push continues. The government is aiming for end-to-end electronics manufacturing ecosystem in India. To talk about where we are and how long would the journey be, what are the critical ingredients that would be required, we have with us Krishna Murthy, former CEO of India Electronics and Semiconductor Association, as well as Raghu Panikkar of Keynes Semicon. Of course, Keynes is already in the fray. They are looking at setting up their own facility in Gujarat. I think it's in Sanand. It's an OSAT facility. So, Mr. Panikkar, if I could actually start with you, because I think now we're trying to attack all spectrums. It's not just about packaging, but for instance, with the Tatas and the tie-up that they've done, we're looking at the first fab facility, CG Power, which is also setting up a facility like yours. I mean, they did a small technology acquisition because I think they want to look at even designing. I mean, so the ambitions are really, really growing. How would you sum up the hectic pace of activity that we've seen in the last couple of months, and really how quickly we can, get along the whole manufacturing curve? And is end-to-end really possible for India?
Absolutely. So if you look at, Kaynes Technology, the mother company has been around for the last 38 years with a $250 million revenue and a $3.5 billion as a valuation. We had the chances to do a lot of EMS post-IPO, but we decided that there are two items within an EMS which attract a lot of, import duties and stuff like that, right? So those are semiconductor components. Second is the bare board PCB. Now, to overcome those challenges, to make India self-reliant and all the made in India and stuff like that, Kaynes Technology, under a subsidiary called Kaynes Semicon, is setting up the outsourced semiconductor assembly, test and packaging. And there's a very bold step. A couple of others have taken. The government has approved a project for close to 3,400 crores. And we are on a path to build that facility. And I believe that, and I always say this, in my lifetime, if I'm able to do this, nothing best like this.
Got it. Just to complete that point, and of course, it'll be great for the country as well as you and others pick up on this. Is this the first step in terms of getting into the full ecosystem, Mr. Panikkar? I mean, the OSAT bit?
Yeah. If you look at India, we have been a powerhouse in design. For the last 30 years, we've been ruling the semiconductor or the VLSI design. It's high time we look at, the front end of the back end and the back end of the back end, which is nothing but fabrication and OSAT. So, with that in mind, if you look at, Tata is putting, Adani is putting with a wafer fabrication, and like us in Kaynes Semicon, we are looking at the OSAT. It completes the end-to-end chain, and thereafter is the EMS and all that stuff.
Got it. Could you break up the, as you say, end-to-end? Could you break up the value of the end product in terms of the various phases that it'll go through?
Yeah.
Give us a broad sense.
Okay, so the design part is pretty much the design part of it, right? And that brings in a whole value chain as far as the semiconductor is concerned. And post the design, the database goes into fabrication, and that's where even though we had a government entity called Semiconductor Complex Limited, which was doing fabrication for ISRO and DRDO. This is the first time we are bringing this more on a commercial standpoint. So that's where the fabrication would come in, which is being done by the Tata with a partner in Taiwan and Adani with a partner in Israel. Post that, once the wafer is fabricated, it comes to the OSAT for the cutting, dicing, assembly, packaging, and testing. These are the 3-4 processes that would happen in an OSAT. And we being in the services domain, this augurs well with what we want to do with semiconductor. Post the OSAT, once the semiconductor product comes out, it then goes into the market. It goes to the distribution channel. And from the distribution channel, it comes to the electronic manufacturing services or the contract manufacturers like us. It comes to us. We do the assembly of those bare boards, putting the semiconductor, you get an assembled board, and from there, the subsystem and to a system. So that's the entire chain, the way the system design or the VLSI design happens.
Now, Mr. Panikkar, so that's obviously, the way the chain works. Now, from the government support side, I think right now the support is to the extent of 50% of the capital that's being deployed, right? Whether it's an OSAT facility or, several other stages of this manufacturing cycle that you described. That does sound like a pretty handsome push. Is there anything else that you would need from the government? And while a lot of players have shown interest in setting up the OSAT facility or the testing and packaging facilities, what would be needed to really drive the momentum on the fab side, on the designing side, more tech transfers? There's, of course, at a country level, at a security level, we've seen the collaboration with the US, for instance, during Prime Minister Modi's latest visit to the US. So what else would be required to address the higher end of the cycle?
Yeah. So, so far so good, honestly. And as you rightly mentioned, 50% subsidy is a decent push for any of the industry to come here who has a prior experience in electronics. Now, 50% subsidy by the federal government, the central government, and somewhere around 20 to 25% with various states government, in this case, Gujarat, Sanand, this 20%. With a 70% subsidy, I think we get a good push. With the 30% of the money that we have raised, it's a good push for us to put an OSAT plant. Now, you asked a very pertinent question, is this good enough? I'm sure at this point in time, yes. But then, there is a whole lot of ecosystem that you have to develop. It's just not the manufacturing. You need the raw materials. You need the gases. You need the chemicals. All these needs to be localized. And some of the foreign companies needs to be attracted. There's a substrate manufacturing that we need to do. I think the government is doing all that. In the last Semicon event, and I was fairly surprised when 50 CEOs came and sat in one room talking to, the senior minister and talking about what India is doing and stuff like that. That's where the OSAT is concerned. Now let's come to the fab part of it, which you had a question. That's a higher capex intensive. That's a big value of machinery that is required and technology that is required. There, yes, we need to be collaborative with US and Europe, unlike OSAT, which is more of Southeast Asia dependent and stuff like that. So, I think the last visit of the Prime Minister, meeting the US President and doing a MOU with the technology which will help our the defense and stuff like that is a first step in the right direction. We ourselves are looking at advanced technology like co-package optics, and we have invested in a company called Mixtech, and that's a company which has a wide pedigree of doing co-package optics in Intel and Broadcom. With that know-how, we're going to bring those process and technology in OSAT to India.
For OSAT, the subsidy is about 75% now, right, Mr. Panikar?
Yeah. Hovers between 70 and 75, depends upon which state you're talking.
Okay, and between fab and OSAT, what are typically margins like?
So I would primarily focus on OSAT part of it. We have studied the EBITDA and the gross margin world over with the top tier OSAT companies and stuff like that. There again, there are less complex technology. In the higher complex technology, the less complex attracts a single digit kind of a margin, whereas the advanced technology attracts a larger percentage up north of 15 plus. So, when we wrote the business plan, looked at three technologies, the less complex, the medium, and the advanced. So that, very soon, we don't want the government or India to think we are just focusing on the less complex. And hence, we want to look at the mid-size complexity, which is called the BGA, flip chip BGA, and the advanced technology, which could be co-package optics.
Mr. Panikar, so the fab, of course, is a higher value add and more complex, more capital investment, more technology, etc. Would the OSAT downstream businesses, what you were trying to do, is that dependent on some of the local fab units coming up, or this will start generating revenues for these individual companies? I mean, how would that work?
Yeah, so good question from a downstream standpoint, right? At the end of the day, you manufacture something. If you cannot effect a change on the pricing of the end equipment or the end OEM, it wouldn't make sense because you're not doing manufacturing just for the sake of it, right? So let's take an example here quickly in the next 10 seconds. Let's say to take an example that, Keynes Semiconductor plans to do a package which goes into a power module. Now, the power module for the EMS of that is done by us. We bring down the prices of the power module using our packages because, we can bring down the price of the power packages. With the module going down, it goes into an automotive OEM and thereby affecting the prices down of the two-wheeler EV and stuff like that. And these kind of stuff that we have to start looking at. A similar example can be given into, the fan market, which is driven by the BLDC controller. We are looking at microcontrollers to be packaged in India and stuff like that. So net, if the downstream effect has to be created, wherever we do the...
Actually, what I meant was, you were upstream for the end user industries, but I meant is you were downstream from a fab point of view, right?
Yeah.
So without the fab ecosystem here, are we talking about importing wafers and then, how is that going to work? What is your raw material in that sense, in the OSAT?
Yeah, so the input to OSAT is basically the wafer. You have to look at
So for that, do we need some of these units which Tata's, Adani's are working with to come up?
Yes, we would need them. At the end of the day, I'm sure it will take 2 to 3 years because bigger fab to be set up, production to start will take time. But from an OSAT standpoint, the gestation period is quite small compared to that. So in that sense, we'll have to start looking at wafers from the multinationals like the TI, like the NXP, like the Infineon. Get those wafers, start manufacturing in India and export it. Some of the wafers we should take and look at the local market and stuff. But yes, wafer would be an important part as far as the OSAT is concerned.
All right, Mr. Panikkar, thank you for joining in. This is good perspective, helpful, because this obviously is one of the most important emerging sectors for India. And of course, we wish all the players are the very best, considering how critical semiconductors are for overall digital and electronic security. Let's take a break on that note. And as we take the break, India's most coveted leadership awards, IBLA Awards, presented by CNBC-TV18, will be back for the 20th edition later this year. The awards, which aim to honor the visionaries behind outstanding business, will feature a star-studded jury, which features Bharat Forge's Baba Kalyani as the jury chair. The other jury members include Ashok Vaswani of Kotak Mahindra Bank, C.S. Shetty of SBI, and Standard Chartered Bank's Zareen Daruwala, Asian Paints' Amit Singhal, Apollo Hospital Sunita Reddy, and L&T's R. Shankar Raman are also part of the jury, along with Titan Capital's Kunal Bell and Cognizant's Ravi Kumar. You can meet the most influential and credible jury at 5:30 p.m. today only on CNBC TV18.
Okay, welcome back. We've got the market up 25 points, which means that we've dropped quite a bit, almost 100 points, I think, from the day's highest level. The day's high was 25,140, and we're at about 25,40. So yeah, but I mean, clean 100 points off the day's highest point. Nagaraj Shetty, Senior Technical Analyst at HDFC Securities. Nagaraj, good to have you with us here. Thank you for your time. What would you want to do? I mean, 1,200 points in 4 days, the Nifty gave up. And we got a bit of a bounce, has been sold into. Would you buy this one here?
Yeah, a little bit confusing at the lower levels. Though market has declined sharply, there is a cluster support around 25,000 to 24,900 levels. And previously also on the weekly chart, though market has declined sharply from the higher levels, Nifty has not crossed below the weekly 10-period EMA over the last 9 months, more than 1 week. So this week, last week, we have already closed below that. This week is going to be interesting. I'm expecting an upside bounce from here onwards. That upside bounce needs to be a reversal from the lower levels. Still, the reversal is not coming. Market is selling at the higher levels. The long lower shadows over the last 3 sessions is indicating that intraday rises are being sold off. So we need to be cautious at the lower levels. Once the Nifty, as far as longs are concerned, once the Nifty sustains at the lows around 25,000 to 24,900 levels, I'm expecting around 300 to 400 points upside bounce in the near term. So one need to be cautious at this point of time whether Nifty holds is going to hold around 25K or 24,900 levels.
Okay, Nagaraj, what about individual stock trades? What are the ideas?
I have two stocks from a mixed side. First one is the Home First. Home First was outperforming the benchmark Nifty over the last couple of sessions. It has bounced back very well. The long-term charts are also looking positive. Higher tops and bottoms are indicating the inherent strength in the market. Currently trading around 1290. I'm expecting this stock to move up. The next overhead resistance to be watched is around 1380 levels in the near term. Second one is on the sell side, short side. On the downside, LIC Housing Finance is looking weak. Recently, it has moved into a distribution kind of a pattern. It was holding around 200 EMA, has broken below that 200 EMA, currently looking weak. Now trading around 620. I'm expecting a further decline for the stocks. 580 is going to be the next supports to be watched for the stocks in the near term.
Okay. All right, Nagaraj, thank you very much for giving us some of those cues and some trades at 10 a.m. Let's head to Nimesh now. to once again take stock of the standout brokerage report of the morning. Nimesh had pointed out some interesting names from the IT side. So how's it looking, Nimesh?
Well, Sylvia, both the names are buzzing in trade. The biggest F&O gainers, that is L&T, Mindtree and Emphasis. And both the names, JP Morgan today has upgraded the stocks to overweight. On L&T, Mindtree, they've raised their target price to 1,600. On Emphasis, they've raised their target price to 3,400. Now, JP Morgan believes that both these names are best proxy placed for the banking and financial services recovery in the US. Now, BFS has been a standout vertical over the last 3-4 months. The commentary has been quite strong. And that's going to be very significant in terms of earnings are concerned for both these names. Now, a Fed rate cut could drive recovery in the mortgages for US. Even that been under pressure for the last couple of months, and that could be significant in terms of re-rating or earnings spends to go up, especially the discretionary spends in the tech space over the next 12 to 18 months. And that could be significant in terms of earnings for both these names, because for L&T Mindtree, the BFSI exposure is close to 35%, and for Emphasis, it's as high as 59% in the BFSI space, and that's going to be a biggest driver for both these names. And hence, they've raised the EPS estimates for both these names and also the target multiples, and hence upgrade to an overweight and target price raised to 1,600 for L&T Mindtree and almost 3,400 for Emphasis.
All right, Nimesh, thank you very much for that. So that's the call coming in on two names. Stocks are outperforming in an otherwise sort of off the highs kind of market. We take a break. We are back with our special segment. It's the economy. Lata in conversation with Nikhil Gupta of Motilal Financial Services, Mahesh Vyas of CMI, and they talk about India's capex cycle. Stay tuned. That's coming up.